So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
So welcome back to Market Talk on a Monday. I'm Susan Littlefield sitting in for Jesse Allen. Jesse literally, folks, is out of the country as he is up in Canada learning more about the potash industry. So I'm sure we'll be hearing more from him as he returns later this week. What an interesting week we've had in this market, a week in a day. Good Lord, because that's what it's kind of felt like. A lot of red on the screen today. The announcement coming out of Argentina. We're going to dive into what that all entails. We'll also talk really about how corn really is a little bit more resilient than we're giving it credit for. As you can see, joining me, John Heinberg. John, of course, is with Total Farm Marketing. And John, thanks for joining us today. And first of all, I also got to give a shout out once again to the folks at John Deere. We'll be talking more about them as the day goes on as well. Let's take a look at this discussion with Argentina. How much of a panic did this set into the marketplace when they talked about these export taxes?
Well, obviously, the cutting of export taxes immediately makes Argentina beans extremely competitive with U.S. beans on the export market. That export tax was at 26%. So now that means Argentina beans are 26% cheaper today, which is obviously one of the concerns in a market where our demand is such an issue, at least in that regard. So obviously you saw the soybean market react to it today. What this will probably allow is the Chinese purchasers to secure some more of those November, December supplies, which there was some hope in the marketplace that would go to the U.S. for, and get them from Argentina, whether it's either meal or purchases of the physical bean. Again, that was just the overall riding factor. We were already breaking apart technically on Friday with that difficult close on Friday. And this was just the news the market needed to make another leg down. So we'll have to see, is this area hold? I'm a little fearful. We're going to go test that 990 level, which is that trend line low going all the way back to last December.
So how much do you see is this the political pressure? But I also read that there was some big concerns with the dollar and for them to be able to continue keeping up in that avenue.
Yeah, I mean, U.S. dollar index has been a big factor, I think, in the markets the last couple of days. We rallied nicely going into the Fed meeting in terms of their interest rate cut on Wednesday. And then we saw the dollar do the, sell the rumor, buy the fact mentality, and the dollar took off. And that was some of the pressure, I think, that really weighed on the market in the second half of the week last week, was just the fact the U.S. dollar quickly recovered from what it was losing in the first half of the week, or when we were gaining some value. So I think that's a big factor in this. The other big underlying piece and the information I was seeing today, that Argentina's government has a target to get the $7 billion of agricultural export sales. So that's why they made this move, again, just to fire up those type of activities. They also lowered beef and poultry cut export taxes today as well to keep moving those products. So again, it's not just focused on grains. Grains is obviously the easiest one because they want to entice the world's largest buyer, which is China, to come back and pick up some more of their supply, which they bought at a very strong pace compared to history out of Argentina.
Well, now, so, you see that pace continuing for Brazil and the works that are being made on ports just kind of shows that maybe there isn't the buyback from the United States that many were hoping for.
I mean, it's a concern, and that still keeps us in a quote unquote demand to bear market here, even though we could see that yield continue to tighten here. You go look at the total export purchases for the last couple of months. Brazil and Argentina combined are about 160, 170 loads more than last year, and U.S. is at zero. So that kind of tells you where that business has gone to. It's obviously flowed to those South American countries.
So let's talk a little bit more about Argentina, since we're talking about them right now and the fact that spring planting for them is underway in Brazil. I guess South America as a whole. What are you seeing? And I mean, I know it's not a huge amount that's in the ground as of this point, but it's still making some waves.
I mean, obviously, as they're getting rolling, I did see a number today about a little less than 1% of the bean crop is planted here in Brazil. Argentina will be getting moving here relatively soon as well. Obviously, the focus now, I mean, you got the world's largest producer of soybeans in South America now, so that's going to turn into a possible weather market as well. If we watch the weather forecast, they were a little bit on the drier side. They've picked up some nice rains here over the last week or so. I don't think that's been helping the markets here the second half of last week and into today. That now they've got some moisture in the ground, they can get those beans in, get that first crop corn in, and get it a good start. A little different than U.S. producers. U.S. producers plant it and hope for the rains to come. They wait for the rain and then they plant. So they know that moisture is there in that subtropical type environment that they're planting in Brazil. So those are going to be big factors going forward. If we do see Brazil dry out, we're going to see the premium come into those U.S. beans, just because the pure fact that, again, largest producer of beans in the world now is Brazil versus the United States, as we hate to say it, kind of becoming a little bit more of a secondary export market.
So talk to me about the resilience that you see in this corn right now.
Nice day today. I considering what was going on with the news that was out there, to have corn kind of go back and test some levels of support around that 419 area, get back above 420 on the close. Thought that was very good to see. We got a nice export sale of 320,000 tons to Mexico today. That's actually our fifth sale in 7 days now, after a bit of a pause window. So that's encouraging to see that, maybe some of those importers are looking at this U.S. weather and going, that corn crop's probably not there. We need to secure some supplies, here 20 cents up where they were doing the heavy buying at, $4 and $3.90 here in the first part of August or middle of August. So that, again, just kind of shows there's some need out there, and that keeps a little bit of the market. Plus export inspections moving pretty decently. Another 1.3 million tons this week. We're up over almost 60% over last year, but marketing week's 2 years old, or 2 weeks old now, our marketing year at this time frame. So it's very early, but the trend is there. So that should help maybe as this corn comes in through harvest, that we can keep a little bit here. So the early corn may be hitting the marketplace, but as producers really get cranking, all of a sudden the sales kind of dry up and there may be some need, and that could give us a little bit of a bid up here. Key area here, we need to hold this area through the week. I think that would be very encouraging. And then I think maybe we go get another shot at that 432.5 gap or 32.75 gap that we just missed it filling a second time here a week ago.
Well, in this corn market as well, it's just, I think the grains in general, waiting to see if we get final resolution when it comes to E15 going year round. But knowing that the demand is there for the corn has got to be a little bit of a bright spot in the overall grains as we see that continued tariff struggle happening.
It is. And then again, for guys who have to make some sales, need some cash flow, and are moving some corn, it just also gives you the mindset that you need to have a little paper into this thing going into the spring, just because this yield could come down very significantly. Some of the early results we're hearing, obviously that's some of the poorer ground that gets mature the first, but disappointing seems to be the buzzword I get from producers in multiple regions. Obviously, some are very good, but that disappointment word seems to be a little bit more commonplace as I've been talking to producers, here recently. The other factor too, we got to keep an eye on, and it's just really just a difficult day today, was that wheat market. That's going to be a bit of an anchor to corn at the same time. New contract lows I see today with the trade. Again, reacting to the Argentina news and that wheat being more available, plus just the overall concern on demand, again, for U.S. wheat, even though export inspections today were very, very good.
Well, we can say a bright spot is the fact that the Western Corn Belt has been getting rains, which is good for this winter wheat going in the ground.
Yeah, it was. And maybe that's some of the reason we're seeing the pressure in the marketplace. Last week on the drought monitor, we're about 40% of the wheat acreage was in some form of drought. So getting some rains at least will maybe get that crop started. Maybe that's a bit of the factor that weighed into the market as well today, that maybe a little bit of weather premium was in there. I was really hoping that low we put in about a week and a half ago and reversed out of there would kind of hold. But unfortunately, today's price action just kind of opens up the downside again in that poor wheat market.
John, you alluded to having a little paper in this game. Combines are rolling, and I'm hearing a lot of guys say, well, I really don't have a full marketing plan in place because I don't know if I'm going to store it or I'm going to ship it to town and pay the storage.
I've had a lot of long conversations over the past couple of weeks with those same types of questions. What do I do with XYZ? And what are the options that are in front of me? And it just takes some time to think it out. The biggest thing, obviously, is money is tight. We're very aware of that and talking with producers. So we need some cash flow. I need to cover some bills. The cost of money, if I store this, comes into play. But this is a market right now, just like we saw last year. All of a sudden we get to the January report, and if that yields 5, 6, 7 bushels per acre for corn underneath where we are, or 2, 3 bushels per acre for soybeans, that supply pile could get tight very, very quickly. And obviously, if you're going to have to put some off the combine into the market here, we need to keep some paper in the market. Don't get crazy. No big margin positions. Straightforward. Own a call. Let it work, and see where you are in the long run. So at least that way, if this thing does find a way to get this yield, let's say we're sub 181 come harvest on that final January report, you've got some paper in the game, because U.S. corn supplies also go from pretty full to tight.
So, what is your takeaway of this whole thing that's going on between Canada and Mexico? We know USMCA is supposed to be looked at in this next year, but it seems like Canada and Mexico kind of working on their own. Is it coming up against the United States and our ag producers?
It seems that, again, there's just the push against the policies that are
Okay.
getting put out there right now, trying to find a bargaining chip between each other to put a little pressure on the United States, instead of right now it's pretty much been us putting the pressure on them. So again, there's a lot of political pieces and pawns moving around out there. And again, still the biggest thing is, we need to keep Mexico happy as an ag buyer. We proved that again with that 300,000 today for corn, and they've been an active buyer of soybeans, and we're going to need somebody to continue to do that if that Chinese business doesn't come in. So that's still going to be a big factor, I think, going forward, is just keeping some of these trade deals that we're working on in place, and then getting them executed in terms of bushels moving. It's one thing to get those commitment on bushels. It's another thing to make sure they get committed to and sold and transported out of the country.
Yeah, we definitely don't want to see any cancellations. As one farmer said to me this weekend, he goes, "It's hard to believe how much politics is weighing into what I plant and how I see my crop growing."
That's very true. And unfortunately, the producers is on the back burner in all of this. Again, grains being used as a political pawn, tariffs used as a pawn, just kind of moving things around to kind of force issues. Unfortunately, unintended consequences hurt the U.S. market for our producers. Again, the chatter of some, MFP type payments is likely brewing. Well, no details out there, but boy, if there's that much smoke, there's going to be some fire, I would say, to it. I do think that some of also what's kind of been weighing on the markets is the thought process that some of that aid money is coming again, whether producers need it or want it. It's going to happen. So we'll see how that probably plays out as well. So those things, in history, when we usually get the talk going into those payments, we usually saw the markets kind of get pressured as well on that side.
You and I were talking before we started today's market talk about some weather issues, and you look at the Eastern Corn Belt, and guys are wanting to get this crop harvested, but just seems like Mother Nature's kind of dried up a little bit.
Yeah, and you go look at that drought monitor index too for corn. 30% of the acreage has moved into some form of drought, up significantly from the last couple of weeks. That's obviously going to have impact on both corn and soybean yields here at the end of the tail in that regard. Now we're seeing a little bit of shift of wetness, looking at southern Illinois, southern Indiana, looking at some fairly heavy rains. Again, that could be just kind of puts a topper on the cake for those producers this year, with wet spring, dry in the middle end, and now we're getting wetness again. So the concerns regarding harvest quality of what's out there come into play here in the marketplace. So we'll have to kind of watch how that shakes out over the next couple of days. But the weather has obviously been not perfect. And then throw in some of the disease issues in terms of the rust as well as tar spot. I just talking to a producer not far from here, and that tar spot kind of slid into his crop and really brought things to a quick end. And he's just not sure where exactly his yields are going to come together, because it's all about the timing of when that actually hit and where the crop was in maturity. So those are some things that it's going to take time to shake all this stuff out. It very well will probably be waiting till the January report, as the USDA will do their process. And but the only thing different this year versus last year they actually raised yield in September and October before they started making moves. This year, they're very indicated that this crop is not as good as they thought it was from the August to the September report for both corn and soybeans.
Anything else on the grains you wanted to highlight before we jump over to this livestock?
Just make sure you're making conversations with people, ask the questions, talk to your elevator, talk to people like myself, get a plan.
Mm-hmm.
There's a lot of risk both ways here. If you sell it, your risk is to the upside. If you're not selling it, there is still downside risk here. just because of the geopolitical structure that's out there. So, understand what it is, keep it simple, keep it straightforward, explainable, and go and enact those plans.
All right. Now, who would have thought on a Monday, limit up feeder cattle?
Yeah, a little surprised by that, especially when we got the news regarding new world screwworm only being 70 miles south of the border in Mexico in terms of a new case. But again, we just saw some really good money flow. Cattle on feed numbers over the weekend were they weren't bullish, but they weren't bearish. They were neutral. But again, we continue to see the path of low feeder cattle numbers in terms of placements. I thought it was going to be friendly to deferred contracts. Didn't quite think limit up, with the action today. The other piece of this too, if you've been watching the money flow, the funds, even though cattle market was rallying to new highs and kind of fell apart here, they've been slowly walking away from this long position. While the cattle market rallied to those recent highs and then rolled over, the funds just kind of gradually kept shortening things up in terms of their positioning, and they had some money to throw at this market again. Now we'll see where it wants to go. I mean, those 240 highs that we put over top that December or that October contract, 242 plus area in December, those are going to be some pretty key spots. If we break through those, do we put a 250 in front of this thing? I think the cash market's going to be the driver behind that, as well as maybe some of the retail prices. We got a rally today with retails basically flat, down significantly off their highs. So cash trade still 230, upper 230s to 240 last week. There's not a lot of meat on the bone for the packer there, so we'll have to see what that shakes out this week. But technically, big breakout move today, and now we got more than likely, I've checked it, but likely expanded limits tomorrow because of that strength in the feeder cattle market. Could give us a lot of volatility here. So producers still got rewards in front of you in terms of price. Make sure you keep those floors in. Just in case things want to flip over very quickly, because we're in that time of year where things could roll around pretty fast based on money flow.
And definitely, and John, they've got some decent input costs too. I mean, their feed costs have really been in check this entire growing season for these cattle.
That and the inputs of the feeders. It's we had great prices, 240 plus, pushing 250, in that window in the cash market. But the margin that they had is so tight because of that input cost. I know everybody's like, "Oh, record cattle prices," and in the media that doesn't understand how this works. At the same time, for the producer, it was also a point of high risk that you can be underwater very quickly on feeders that you're buying at these price levels. 6 months ago, if we don't hold the prices here.
What's the one thing we want to keep an eye out for this cattle market as the week goes on?
Obviously, what's the right direction of retails? Do we start seeing some buying strength in there? Now, one thing that's a concern, we saw a pretty good drop in poultry prices recently as well. So now we got this cheaper meat that's coming in that can compete against the beef in the retail space. So that's something we'll have to keep an eye on. Again, what's happening there? Because if the consumer backs out, that's going to be the first thing that really kind of wakes this market up, makes it concerned. Obviously the fundamentals in terms of at least the cattle numbers are still very supportive of firm prices. Again, we could see a nice rally here, get into the low 250s if the cash market says, let's do this. Or we do see a basis flip where the futures overrun the cash market. That wouldn't surprise me also in this window, just because of money flow. But then again, we probably look to roll this thing back going into the first of the year. And then I think any pullbacks with that number of cattle that are being placed here for the spring, summer months is going to be an opportunity for producers to make sure you got some ownership in over any cattle that you may have priced, or targets as if we get a good run in the spring that we sell and we got calls already working.
All right. Thanks so much, John. John Heinberg joining us today. Of course, he is with the crew over at Total Farm Marketing. Hey, quick reminder, data-driven farming means better decisions and more peace of mind. So where can you get that data? John Deere. John Deere Operations Center can give you real-time data and insight that helps you run your farm better. Thanks again to John Deere for their sponsorship. And that's another edition of Market Talk.